Is the real estate market going to drop like it did in 2008? I've been seeing a lot of people on social media advising their observers to wait, don't buy yet, wait till prices drop. But is that actually the case? My name is Carlos Almanza. I'm a real estate broker here in El Paso, Texas. I work with a lot of buyers and sellers and renters. And I have been asked this question a lot. So let's talk about it. Now, here's my take. Let's talk about what happened in 2008. Leading up to 2008, there was a lot of subprime mortgages being assigned. People were qualifying with no jobs, no income approved. They were called ninja loans, right? A ton of people were getting these loans, and then investment firms would roll these loans up and sell them as mortgage-backed securities that would help out people's retirement accounts. People started defaulting en masse, and then the whole market collapsed. So there was a ton of foreclosures. So we started to see a lot of inventory from foreclosures hit the market. At the same time, lenders started tightening up their underwriting requirements, which took out a lot of buyers from the market. And then three, of course, with the recession, it hit. And in general, people don't make big purchases when there's a recession going on. So all of that led to the perfect storm, which led to real estate markets taking a huge nosedive. Now, I'm not a financial analyst. I'm primarily a real estate broker. This is not financial advice. This is what I've seen. And a lot of people are seeing today now on social media, they're starting to see a lot of leading indicators that a recession is imminent. They're seeing that in the market. And because of that, they're thinking that the real estate market will collapse again like it did in 2008. But from what I have seen, no, it will not. It will not collapse like it did in 2008. I'm going to talk a little bit about nationwide terms, then focus it on Texas, and lastly, dial in on El Paso because I live and work in El Paso, Texas. Keep in mind that real estate is a very local level commodity. It is influenced a lot more by the elements within your market than by national trends. El Paso is a very different market than Austin, which is very different from LA, which is very different from New York City. So keep that in mind. Whatever applies to this market may not apply to yours, even though the same national trends are influencing both markets. All right, let's talk foreclosures. Foreclosures are absolutely up. That is a trend. It's not a good trend. It is a trend. Foreclosures are up this year. In the first half 2026 alone, we were up 21% on foreclosure starts compared to last year. Bank repossessions are up 33%. But even though the trend is going up on the foreclosure side, if we look at foreclosures overall as a whole, looking at all of the properties in the nation, it's only 227,000 total houses going into foreclosure, which is only 0.16% of all housing units in the country. That's roughly one in every 632 homes. That's not a whole lot. In comparison to 2008, we had about 23%. All the mortgages in the nation were underwater, 23% versus 0.16. That's a huge difference. We don't have the volume on this side to result in that same price drop that we saw in 2008. So even though a recession could hit, we're not going to see the same impact in the housing market that we saw in 2008. Let's go on and talk about Texas. Unfortunately, Texas is leading the nation in foreclosure starts. I believe we're at, let me look at my figures. Yes, here we go. So Texas is leading the nation with about 20,739 foreclosure starts in the first half of 2026. Definitely a lot. But if we look at those foreclosures as a whole, in terms of all the housing units in Texas, it's about 0.18%, which is not a whole lot overall. And if we do a comparison size versus the size of Texas versus foreclosure starts versus other states in the nation, we're ranked 12th. So Florida has about 0.27%, which is still not a whole lot of percentage for their houses, but Florida has more houses as a percentage of the population Entry and foreclosure in South Carolina is second at 0.26. So as a whole number, Texas is leading the nation of foreclosure starts as a percentage of the population or as a percentage of the whole houses within Texas. We're actually 12th in the nation. Not a good thing to be 12th in the nation, right? But still, we're still 12th in the nation. It still doesn't mean that prices are going to drop across the board. Some communities are seeing prices drop. For example, let's talk about Austin. Austin is seeing a major pricing correction for compared to its COVID highs. You could say that market is crashing already, but that is market specific. We're not going to see it across the nation as a whole. And I could explain Austin. Austin, during the height of COVID, a ton of people from California, from out of state, moving into Austin. Austin's a fun city. If you've ever been there, check it out. A ton of people moving into Austin. Austin was expected to be the next Silicon Valley. A ton of technology companies are expected to move in, set up shop, bring in their workers there. Developers saw the dollar signs, they saw money, they started building a ton of houses in anticipation of all these additional workers who were going to move into the city. And then that never happened. Some companies said move into Austin, a lot of them did not. Those workers did not come. So we got a ton of housing inventory in Austin, but those workers didn't come to fill those in. And then to top it off, some of the people that moved in from California didn't like Iceland. They didn't like the weather. They didn't like whatever it was that they didn't like. They started going back to California. So as a result, Austin's real estate market dropped. I think right now they're about 25% from their COVID high. So that is happening in individual communities. It is not going to happen across the board, across the nation, like it did in 2008. Now, again, I'm a real estate agent here in El Paso. So let's dial in into El Paso and see what I think. Should a recession hit El Paso, what would happen? Now, El Paso is a border community. We have Fort Bliss here, ton of soldiers. I think we have about 35,000 soldiers here, plus their families. We have a large border patrol population, customs enforcement population. UTEP is here, so we got a ton of professors and all the admin staff that works at UTEP. We have a large medical community here. We have the Paul Foster School of Medicine, the Texas Tech School of Medicine, the School of Dentistry. We have a ton of hospitals here. So El Paso, those jobs aren't really influenced by a recession as much as like a factory job would. We do have a lot of warehousing here in El Paso that could be influenced by the recession, but government jobs in general are not going to stop hiring if there is a recession. A lot of those people are not going to lose their jobs if there is a recession. Now, here in El Paso, we deal with another problem. If the government decides to cut funding for the Border Patrol, yeah, we're going to get people losing their jobs. If the government cuts funding or moves from Blizzard or El Paso, we're going to be in a world of hurt. But that's a different problem set that we'd have to deal with, not to deal with a recession. So if the recession does occur, those jobs here will anchor us and it's going to actually protect El Paso from a huge pricing decrease. Now, one of the big indicators of trouble is negative equity, and El Paso is a very heavy VA and FHA town. VA meaning you can buy a house with no down payment. FHA meaning you can buy a house with a minimum down payment. And if you run into financial straits, you can't sell a house. Very rarely could you sell a house with a 1 to 2 years of the VA or FHA loan because you do not have enough equity to sell. So those people are more at risk of foreclosure than someone with, say, a 20% down payment because that's a hedge against foreclosure. Come in with a 20% down payment, run into financial straits, you at least have some buffer there to sell your home without going into foreclosure. You sell it on the open market, you get some money back. Having said that, El Paso is about 47% of owner-occupied homes in El Paso do not have a mortgage, which means you can't foreclose on them since they do not have a mortgage. That's compared to about 39% nationally. In El Paso, the median time on market is about 68 days, and the median sales price in El Paso is $279,000, and sellers are getting about 99% what they're asking for on most properties currently. So that's a balanced market here currently. Yes, we got used to it in El Paso. COVID market, you put a house up for sale on Friday, you have 10 offers by the end of the day. Now we're back to a more balanced market, and to a lot of sellers, it feels like a buyer's market, but it's not. It's a fairly balanced market. And it's not at risk for foreclosure, at least as we see it now. Now in a recession, I see properties sitting for longer, but owners like to protect their equity. I don't see prices dropping because of that support system that I mentioned earlier. Yeah. So we aren't immune in El Paso to market downturns, but we just don't have the volume here of properties that could go into foreclosure to result in a big market downturn that people actually want to happen. So to recap, is there going to be a recession? I would expect so. A lot of people are expecting it soon. We're overdue for one. Are we going to see prices drop like they did in 2008? No, I do not think so, especially not in El Paso because of those hedges. Now, if there was a announcement that Fort Bliss was leaving El Paso, we might see a big, significant price drop there because they're taking away about 30,000 people. Actually, that's a lie. 30,000 soldiers plus their wives. So about 60,000 people from our population. That's a ton of inventory that would be hitting the market. That's what El Paso would face, a huge price drop. But as of right now, if there is an inflation, I don't see prices in El Paso dropping. Again, to reiterate, real estate is a very local level. Study your market, ask your local expert to see how your market would react specifically. Do not expect prices to drop like we did in 2008 across the board nationally. It's just not going to happen. We don't have the volume of inventory to flood the market like we did in 2000. So if you like this video, comment below, like and follow for more content like this. You'll have a great day.